stage our first speaker, the president and managing broker of Goldmark Commercial Real Estate, Andy Westby.
Thank you all very, very much, and welcome to Connect 2023. We are thrilled to see so many here, especially given the weather this morning. So thanks for trudging through the fresh snow to come out and join us here today for Commercial Connect 2023. My name is Andy Westby, and I am the managing broker here at Goldmark Commercial Real Estate. And again, we sincerely appreciate your attendance today. I and the team of agents who are going to be talking today couldn't be more excited to see you here. And maybe next year we'll get a little bigger room. I'm sorry for some of you who are packed in here. But before we begin, I'm going to just briefly introduce myself, give you a few fun facts. I did spend about 16 years in the technology and software world before I came into commercial real estate in late 2015. And a couple other interesting tidbits. I happened to have a birthday last week. I turned 10 3/4 year old. So you guys can figure out the math on that, okay? And if you've heard the rumors, it is true. I love pizza and pivot tables a ton. Those two things are staples in my life, and they were a huge factor in the team and I helping to put together the information for you all today. Now, one quick note about my technology background. It has come in very handy. You might think software, real estate, two very different things. I would argue quite the opposite. And the information that we've compiled today and the data we're providing is information that our market has really never had before. And our team has spent a lot of time, not just in the last month or two, but over the last 3-4 years compiling information. And we're really excited to be able to share that with you guys here today. Now, a little bit about why we're here and how we got here. So first, why? Really simply, guys, what we're here to do today is give all of you information that will make you and your clients, or help you and your clients, make more informed decisions in the weeks, months, and hopefully year to come. And we're going to do that a few different ways. We're going to take a look at some national data. We're going to look at historical data. We'll look at where we stand today, and we'll use that to predict as best we can into the future. Now, a little bit about how we got here, okay? I owe a big thank you and debt of gratitude to the folks in Sioux Falls at Bender Commercial, and I know we've actually got someone from Sioux Falls drove up for this event. Bender has been putting on a market outlook event for 26 years. I believe their 26th was just last week. A few of us had an opportunity to view their 25th last year, and it was the inspiration we needed to bring a similar event to this market. They've been providing information on the whole market of Sioux Falls for 26 years. We saw the value that created for the community, the engagement that they have around commercial real estate, and we wanted to do the same thing for the Fargo Moorhead Metro. And so big thanks goes out to Bender Commercial. If you're ever doing business down in Sioux Falls, make sure you look those guys up. Now, one note, these slides are going to have a lot of information today. We're going to give you a copy of these. So anyone who's registered, you'll get an email with a link to download this slide deck, because I guarantee you there'll be some slides where you're going to go, oh, they moved off too quick. I was still reading that, or wanted to take a note of that. Sit back, relax, just listen to the content, and you'll get a link to those slides today. Now, if you know our team, you know we have a lawyer, former lawyer, practicing lawyer on our team, Mr. Paul Campbell, who you'll hear from in a bit. Like all good lawyers, he suggested we have a disclaimer, and so I have to have a real quick disclaimer. We've compiled data from a ton of different sources, external or own internal sources. We've done our best to validate, double check, triple check that data. I can't promise everything is 100% accurate. And if there's a piece of data that we didn't know or couldn't find, only Patrick made something up. The rest of us actually just chose not to use it, okay? But we have done a lot to try to give you the most accurate information that we can. Enough with the disclaimers and the setup. I'd like to jump in. And so if you'll allow me just a few 10 minutes or 15 minutes to give you a national, regional, and then local overview from an economic standpoint. And then our team will jump into the individual market updates. Now, I don't know how many of you, with the snow today, you might have been a little bit rushed. You might have missed the breaking news that was just released this morning, and so we thought we probably should start with this. But due to inflation, the 5-second rule has now been extended to the 10-second rule. My kids will be thrilled to hear that. Inflation and the media's stories around inflation, interest rates, recession, these things are being pounded at us right now. And we think the media is doing a fantastic job of playing the Chicken Little role right now, telling us the sky is falling, the sky is falling. And the proverbial acorns that they're throwing at us to make us believe that, they center usually around three things: inflation, interest rates, and the dreaded R word, recession. And of course, the media, like they do, they're going to have a lot of data to support that. And so from an inflation perspective, there's all kinds of numbers we could highlight. We picked just one. PCE index has been above 6% since December of 2021. From an interest rate perspective, I know there's a lot of bankers in here. I'm not educating you guys on anything you don't already know. Significant run up in rates last year, 7 total rate hikes. And from a recession standpoint, recent study came out, 2 out of 3 economists that were surveyed believe we are headed for a recession, 66%. Of course, there's other signs as well, the 2-year and the 10-year treasury inverting multiple times in 22, signs of a future recession. We get the question every day, probably, from the owners and clients and investors that we talk to, is commercial real estate headed for a bubble? Is it headed for a crash? Is the sky falling in commercial real estate? We find that question to be very binary thinking, because commercial real estate is not one thing. It is not one market. It is many different markets, each on their own cycle, their own peaks, their own valleys. And today what we want to help you understand is where are we within those peaks and valleys within those individual markets from a Fargo, West Fargo, and Moorhead perspective. So I have to touch a little bit on inflation. Of course, probably the biggest category that has impacted our industry, construction costs. If you look at the data, this chart gives you the different materials and components and the year-over-year increase or decrease. Lumber, the only thing that year-over-year went down. Everything else, up, and up considerably, right? They figured about 10 to 20% overall construction costs rose. Within our own office, I think we probably had 3, maybe 4 deals and clients that came off the table last year. Said, you know what, we're not going to move forward. Construction costs are just too high. That was a minority of the deals, but it is having an impact. From an interest rate perspective, again, I'm not here to educate anybody because everybody understands, but the Fed didn't act in 21. I think most people believe they probably should have acted sooner. They didn't. And so they had to play catch up. And in 2022, they rose rates faster than they ever have before. Where did we end the year? Well, our federal funds effective rate is at a 15-year high. Mortgage rates about a 15-year high. And that's what's getting the headlines. Okay? But I think what everybody needs to remember and keep in mind, rates are still below long-term historical averages. If you take those charts and graphs and you go 30, 40, 50 years and you look at that historical average, we still sit at or below that. And that's an important point that I think our clients and our market needs to understand. However, these rates, these increases, they do have an impact on real people. So what we saw happen in 2022 has led to a lot of impacts for many, and let's just look at it from a mortgage perspective. Okay, the average mortgage in the United States is about $1,500 a month, give or take. So at the end of 21, with where interest rates stood, you could buy a home that was about $346,000. Fast forward 1 year later, because of those rate hikes, your buying power was about 31% less. You could afford a home that was $239,000. That's a real impact for a lot of people. Now, there's a handful of other macro trends, and I'm gonna get out of the doom and gloom soon, okay? A few other macro trends that I think are worth watching, that our team keeps an eye on. From a supply chain perspective, another national headline, certainly I would say probably the 3rd biggest disruptor of change in our economy behind inflation and interest rates. There has been a huge explosion of industrial across the nation. We're also seeing that locally. Brett's gonna go into a lot more detail in his section on that. Residential upheaval. As interest rates have risen, some of the national data, it's a little scary. You got builders, the major builders around the country have talked about cancellation rates from 20 to 70%. Home sales were down close to 18%. Locally, it's a little bit mixed. Our friends at Prime Real Estate helped give us some data. Total sales were down a little bit in terms of homes. Inventory's been up a little, but average sale prices were strong and growing. And so this isn't a bad time to be buying or selling a house in the market. Workforce and unemployment, another major headline, both nationally and locally. If you look at the data, from a U.S. perspective, we have a shortfall of about 5 million workers, they estimate. From a local perspective, we sit in North Dakota with the number 1 unemployment at the end of 22. Minnesota ranks 11th with 2.9%. However, the first stat I want to highlight, and our friends at the EDC have helped uncover some data, we grew our workforce in the Fargo, Moorhead, West Fargo market at 3 times the national average since the year 2000, from 13% national, 39% locally in labor force growth. That's a significant difference and shows we are doing something right in terms of workforce growth, even though it's still not enough. Okay, the good news, I see a lot of folks from the chamber and from the EDC here. There are multiple initiatives and grants that are underway to address that issue. And certainly there's a lot of smart people putting their heads together about what we can do to grow our local workforce. Okay, real quick, I'll touch on global conflicts. Of course, Russia, Ukraine, the ongoing conflict there. I didn't see any weather balloons flying over this morning, but China, there's always the concern about what's happening there and are people bringing more manufacturing and jobs out of China. From a local perspective, one of the interesting things, Russia and Ukraine export about 30% of the world's wheat, and they're major energy exporters. North Dakota's got a lot of wheat and a lot of energy, so there's some potentially positive impacts our region could have. I don't want to minimize, of course, the human side of those conflicts. And then finally, the last macro trend I want to touch on is cash. If you look at the data from a Federal Reserve perspective, cash deposits from June of 19 to June of 22 were up 39%. Significant raise in deposits from the stimulus and the activities that happened after COVID. Locally, our numbers mirror it. So I think Cass and Clay County are at 38, 39%, same story. The next report will come out in June of this year. There are some signs that that's starting to weaken. Deposits are starting to go down, largely due to inflationary spending and then moving assets around a bit. So cash starting to come down, but there is still a lot of cash on the sidelines waiting for the right opportunities. And this just might be the year where we see some of that. So enough of the national side. I want to get more local. And specifically, we're going to get regional, and then we're going to dive into how we are faring on a few different measures. So first, let's just set the stage from a Fargo economy and a Fargo population perspective before we look at our regional competitors. So first, from a diversity of economy, again, another stat that we were fortunate enough to get from the EDC folks. Fargo, in a recent study, ranked in the top 19% for most diversified economies. And this was out of a pool of about 380 cities, similar size cities across the U.S. Okay, of those 380 cities, we're about 50th percentile by size. We're in the top 19% for diversity of economy. That's a huge benefit to our region. We are not driven by just one industry. And so while one sector might be struggling, our economy keeps chugging. And I think we've all seen that. Through national recessions, we tend to not have the same types of impacts. And then from a population growth perspective, this was a study done just a few weeks ago, or released just a few weeks ago by Metro CRE. I believe the Forum had a story on this as well. We sit at about 250,000 people today in our MSA, in our population. They're projecting 100,000 more over the next 25 years, okay? 100,000 more people. They'll need more homes. We'll need more infrastructure to get to those homes. We'll need more office buildings for them to work in, manufacturing businesses for them to work in. The infrastructure needed to support that growth will continue to drive the engine of commercial real estate and residential real estate in this market for years to come. Now, let's take a quick look at how we stack up against some regional competitors. And I'll give you a quick description how we picked these cities, kind of 2 criteria. If you met one or both, you were in. Population size in the Midwest was one criteria. So Sioux Falls, Rochester, Cedar Rapids, similar populations. or diversity of economy. Other metros who have a very diverse economy, and I'd say Sioux Falls fits into that, and Omaha definitely fits into that. Omaha's much larger, however, their diverse economy was one reason we felt we should put them on, and they're a nice, easy trip down I-29 too. So from a median home value and rents perspective, we stack up favorably. Keep in mind when you see national data, they're not adding in specials, so you would want to add specials and an average amount into that number. From a cost of living and an income perspective, this is where we sit. You might not find us at the very top of every list or every measure, but you also do not see us at the very bottom. And I'd say regionally, we stack up very well when it comes to incomes and cost of living across our region. And then finally, the other thing we wanted to analyze is what type of investment level is going into those communities. So we called all the planning departments at all these cities and we said, give us all of your permit data. Residential, commercial, new construction, remodels, just give it all to us. We added all that data up. We divided it by the population of that metro, and this is where it ranked. You see Sioux Falls at the top, okay? And I'll point one thing out. I learned this from the Bender folks last week. Sioux Falls grew their permits 75% year over year in 22. They had a banner year, just a boom of a permit year. Had you looked at this in 21, Sioux Falls would not have been at the top of this list. Okay? But where we sit from a Fargo, Moorhead, West Fargo, very, very competitive and strong investment levels going into our communities, even in an environment of raising interest rates that we saw in 22. Now, we're gonna dive deeper into Fargo, Moorhead, West Fargo data. Okay, enough of the regional, enough of the national, let's get local. So thanks to the Home Builders Association, we've got their hands on the latest data for 2022, and we went back to a 5-year period to take a look. Now, you're gonna see a theme today. I'll point it out right now. 2021, that bar chart is the longest bar chart, meaning the highest permit value of the last 5 years. 21 was a banner year. You're gonna see a lot of data today where 21 is almost an outlier. Okay, and a lot of our team will help explain some of that, but short answer, a lot of pent-up demand, things that didn't happen in 20, the kind of floodgates opened up a little bit in 21. And so we just saw a rush of activity across leasing, sales, permits, you name it, okay? Which makes that year-over-year comparison a little bit tougher. So we're down a little bit, but I don't want to get negative on that because if you look at where we sit relative to COVID and pre-COVID years, 20, 19, and 18, we're still above it. So the investment levels we're seeing in our community, still growing, still very healthy. Now, we were curious. As we got this data, we looked at commercial, multifamily, residential. We wanted more detail on the commercial part of that chart. And so what we did, we took every permit from the last 5 years, and we broke down those commercial permits by 3 types: office, industrial, and retail. And as far as we know, we haven't seen this data before, so I believe this is the first time, at least publicly, that we've seen this. This gives us an idea of, well, in each one of those sectors, where has the permit value been in the last 5 years? And some things jump out at us a little bit. Office permits, pretty steady. The first part of that bar chart on the left side. Year over year, very steady. Industrial, down, big. Okay, and that sounds very negative. When I say that, Brett's gonna tell you why this went down and that industrial is still doing very well, despite what you see here. You can't always just look at the data and make an assumption. So Brett will go into more details about why that was down. And then retail, permits were actually significantly up. Might surprise some people, but when you look at the data, it shows us we had more retail permitting last year than any of the last 5 years, okay? So a lot more to come on this. And one thing else I'll note, multifamily units will not represented. We also hit a 5-year high on multifamily units permitted last year. From a sales perspective, commercial real estate sales, okay, what we did is we added up anything that's classified as commercial real estate, broken down by a few different types at the bottom. That might be hard for some to read. You'll get the slides. And looked at total volume of sales. So this would be land, office, retail, industrial, you name it. And again, the same theme emerges. 21, banner year, kind of an outlier of a year for total sales. 22, still very healthy. Still represented growth beyond those years prior to 2021. So it was definitely a busy year in the world of commercial real estate sales. Now, what we're here to do today a little bit as well is look forward. Not just look back, not just look at where we are, but also help you guys look forward. And so perhaps when we're back next year, we'll see how good our crystal ball is. But to start with, I want to reiterate, we don't believe the media's Chicken Little story, that the sky is falling, at least not here. We sit in a very strong position with a very diverse economy, a growing population base, continued investments in this community, despite rising interest rates and fears around inflation. Okay, so what are our predictions? There probably will be a national recession, so count us in the camp that the national level is headed for some type of a recession. Maybe we'll have the soft landing, but something. I think locally, what we're looking at is more of a recalibration, not a recession. Things might flatten, might level a bit as people adjust to this new normal of where we sit from an interest rate perspective and where inflation is until we get our arms around that. We do not see us headed for any cliff. Fargo, Moorhead, West Fargo, traditionally we are the little engine that could. We might not go up on the hockey stick, but we do not go over a cliff, and we expect that to continue this year. Total commercial permit values we think will be down some, and if you look at the early data for the first few months or first 2 months, we're trending downward a little bit. I think some people might be hesitating a little bit. I think we'll adjust to this new normal. Permits will actually climb by the end of the year, but I think we'll end up on the year down just a bit from where we were this year in 22. I think sales will be up. If we look at that chart next year, total commercial real estate sales in the market, I think will grow if we were to bet. And then finally, if I had a tagline for what we would say and label this market as, I think the state of our market is strong. It has been strong. We believe it will continue to stay strong. Okay? Now, within every section today, you're going to get one wild card prediction. We thought, for those of you who maybe get a little bit bored by real estate, we should throw something else in there. And so my wild card, unrelated to commercial real estate, I believe the Cleveland Guardians will win the 2023 World Series. And my Yankees friend is laughing over here. I'm not going to bet on that. I won't put money on it, but I did put it on the slide, and to me that's worth something. All right, folks, what I'd like to do is set the stage for our next speakers in terms of the market updates. They're all going to follow a very similar pattern. Okay, we'll start with just a minute or two of national headlines, and then we're going to get really local. And we'll talk about historical data from a sales and leasing perspective. We'll talk about a current status of sales and leasing. We'll give you some example sales, leases in the market. We'll talk about some of the developments that are coming, things to expect in 2023, and then we'll give you some predictions within that individual market as well. One last note before I get Nate up on stage. I've already said it a couple times, but I need to reiterate it and add a couple things. These slides and this presentation is full of a ton of data, okay? And the most important note I want to make is this data and the example deals and the numbers and the volumes, this is not meant and not derived from just Goldmark Commercial. We are one brokerage in town. We are trying to represent the entire market. So the deals you see, the data you see, this is not Goldmark specific. This is the entire Fargo, Moorhead, West Fargo region. So I want to make that abundantly clear up front. Okay, and then number two, we have worked really hard to compile this data. Some of this data we update daily, some of it weekly, some of it monthly, quarterly, and annually. If at any point during today's presentation you see something that you have a question on, you want to go deeper on, or you even have a challenge to, I know that number's not right. We'd love to hear from you, okay? Come up, stop, talk to us afterwards, call us, email us, whatever you need to do. We'd be more than happy to spend time with you, to show you the data we've collected, help you understand where it's come from, and answer any questions that you might have on it. And remember, the slides will be emailed after the event. All right, enough from me. We want to get into the individual market updates. And so first on your agenda is a land update. And this is going to include both raw land, land that has not been developed, along with improved land, land with services and infrastructure and ready to build on land. And I'm pleased to be able to introduce to you our next speaker. He is Nate Vollmuth, who's a commercial agent with Goldmark Commercial Real Estate, and he is also the president of Goldmark Design and Development. So he's kind of the Swiss Army knife, if you will, of people in our market, I believe. Nate's been a licensed architect since 2009. He's licensed in 10 states. And of those 10 states, he has worked on over 40 land development deals in 5 of those states. And there's one more thing about Nate you should know. There's nobody better to talk about land because he's the shortest guy on our team and he can see the land a lot clearer. So please help me welcome to the stage Mr. Nate Vollmuth.
I was actually going to tell a joke about my height, and they killed it for me. I think everybody from the back maybe found a seat. I think there are a couple others up here too. If you want to jump up here quick. So, thank you, Andrew. As Andy stated, my name is Nate Volmuth. I've been with Goldmark Commercial for the past 3 years. Prior to my time at Goldmark Commercial, I worked with a large land development company here in Fargo from 2013 through 2019. And because I met a gentleman from Sioux Falls this morning, I'll give a shout out. Previous to that, I actually lived in Sioux Falls from 2004 to 2013 and worked at Good Samaritan Society as their owner's rep and also at Avera Health, Sanford's main competitor, as their architect. Prior to my time, along with being an agent for Goldmark Commercial, I'm also the president of Goldmark Design Development. We provide architectural and land development services. Today I'll be giving you a land update on sales and the driving forces pushing those sales. I will dive deeper into raw land sales and improved land sales in 2022, while also comparing those numbers to the previous 4 years. Let's get started. Push the right button. All right, first off, national trends. Andy touched on this as well, and I'm not going to talk about it too much, but inflation, construction costs, interest rates, these three factors have and will continue to have a negative impact, at least through 2023, on land sales, both nationally and locally. Nationally, COVID had an industry-wide pause on land sales. This pause negatively affected primarily office and the retail market. However, conversely, it had a very positive impact on industrial land sales, which Brett will talk to more later on. Zooming in more locally, some of the impacts that we have unique to Fargo, infrastructure and specials, the costs of putting services in the ground. Locally, these costs are paid through special assessments, which is a wonderful word that we all know. Because of the rising costs of construction, unfortunately, specials will continue to rise. The FM diversion. In recent years, the city and the state have made great strides in helping alleviate some of our flood issues. But because of the low grade of our land and the height of our land, and also the height of myself, I guess, thanks to Andy, the FM area the low grade can have some significant impacts on pricing of land from one place to another within town. And lastly, notable projects. Sanford Health Hospital, Costco, the new Fargo Park Sports Complex. Land around these projects gains value with the presence of these types of projects. And the biggest reason why, increased traffic counts. Before we jump into some of the numbers for 2022 and prior years, I'd like to just quickly talk about some of the other factors that drive land sales. Everyone's heard the saying location, location, location. Location has a couple key factors: access, visibility, traffic counts. Location is a driving factor in all land uses: single family, multifamily, industrial, you name it. Some land uses have more of an effect on pricing than others, but as you'll see later in the presentation, location affects all uses. Supply chain delays. Brett will talk more about this in the industrial section. Recently, this has had a very significant factor in regards to industrial land sales for the positive. Parcel size. One thing that's often forgotten about, large parcels are purchased for less per square foot than smaller parcels. Easements, the things that you don't see under the ground. Pipelines, access easements, all these things can have negative effects on pricing depending where they lie within your site. And lastly, zoning. City zoning or city master plans have a tremendous effect on current and future land values. So let's look quickly at raw land sales in 2022. On the left are sales between 2018 and 2022, mostly concentrated in the Northwest and Southwest. Northwest primarily industrial, Southwest primarily office, retail, single and multifamily. On the right is the slide is showing just the raw land sales in 2022. Diving deeper into the 2022 numbers, roughly 2,000 acres in Cass County were sold in 2022 with an average price of $29,000 per acre. The city of Horace ranked number 1 in average price per acre, trailed closely by Fargo and West Fargo. Before we look at some of the 2022 noteworthy raw land transactions, I'd like to explain one concept called land banking. Land banking is when a developer or investor purchases land to hold for future development. These holding periods can range from 2 to 10 or more years. This slide shows 10 raw land banking sales. Remember we talked about location. North Fargo, which is primarily industrial in nature, had 3 transactions at $23,000 an acre. Moving to the South Metro, much more activity and at a significantly higher price point at $41,000 per acre. Location and land use are driving factors for those higher prices in South Fargo. One example of a North Fargo raw land sale, parcel is located just north of the Amazon distribution facility, a 112-acre parcel that sold for just over $33,000 an acre. Moving down south, we're going to look at 2 quick sales. Sale number 1, an 80-acre parcel, located just on the west side of I-29, sold for $31,000 an acre, most likely future office or industrial land. And sale number 2, a site just south of Davies High School on the intersection of 76th and 25th Street, 2 future arterial roads. This site most likely will be office, retail, with transitioning to single and multifamily on the backside of the lot. Now, into improved land sales, developed land that's had services, infrastructure, has gone through the entitlement process at the city. Developed land came off their peak in 2021, much like Andy alluded to, but still 2022 had a very solid year, both volume and value. Clicking into 2022 a little bit more, diving into 2022 a little bit more, retail land sales drove an average price of $17.62 per square foot. One thing I want to note on industrial land sales. Earlier in the presentation, I talked about size of parcels and how larger parcels sell for less per square foot than smaller. This is a perfect example. In 2022, industrial lots that were smaller than 5 acres in size sold for $3.98 per square foot, a roughly $1.20 per square foot premium to those larger industrial parcels. And the third grouping by city, Fargo led the way in 2022 in all categories except industrial. Moorhead was a leader for total and value of industrial land sales, mostly due to a small sample size that included a high-priced transaction of a large industrial parcel. Now, jumping into some noteworthy improved lot sales. I can tell this joke's going to work already. I like it. This slide shows land purchased in 2022 for car washes. If your car's outside and dirty right now, you lived in a vacuum for the last year. All kidding aside, car washes are paying top end per square foot for land, $28.67 per square foot across the metro, with 4 car wash land deals in 2022 and more to come in 2023. Let's look at 2 noteworthy improved land sales. First, the Harvey Lane block on South University Drive, kitty corner from Sanford Health and Essentia Clinic. This entire block was purchased by a local development group and is currently being demoed. This project will be discussed a little bit more further along in the presentation. And second, a noteworthy improved lot sale on South 45th Street. This is a good example of an infill type project that happened on a site that's seen little activity in the past years. This purchase was brought on by a couple factors. Increased pressures of the FM diversion and the lack of new development land on the market, specifically in South Fargo. Secondly, older sites have much less specials than newer sites that have been developed recently. And lastly, the sale was further prompted by a notable project, two notable projects actually in its vicinity. One directly to the east, 180-unit high-end multifamily housing project, and the other, the Eola project just to the north, which is going to have office, retail, hospitality, and a potential water park. So looking forward, as Andy did, into 2023 predictions, I predict that land banking transactions will be up. This will be pushed by less building and more acquiring or preparing for the future by local developers. Industrial land sales will also be up. Brett will discuss this a bit more later in the presentation. Retail land sales, I believe, will be down. Construction costs and the workers to not only build these facilities, but work within them, a driving factor. I do feel like office land will start to make a comeback in 2023. And lastly, mixed-use multifamily acres will be up. The need is great, and with higher interest rates, it leads to more renters and less buyers. And lastly, my wild card. I'm not going to make as terrible of a prediction as Andy, but I believe that our Minnesota Vikings will not win the Super Bowl this coming year. So that's all for me. We're going to move into the office update now. And I want to introduce our next speaker, Mr. Paul Campbell. Paul is a commercial agent here at Goldmark Commercial Real Estate. Paul is also a licensed and still practicing real estate attorney. Paul led our team in 2022 on total lease transactions. And last but not least, Paul fills our quota for one UND graduate. We're good for a while. Welcome to the stage, Paul.
Thanks, Nate. I'll take the UND dig. I'll take it. Thanks, Nate, and thanks, everyone. I'm excited to be here today to talk about the office market. Before I begin, I did want to make one, there's a misprint I want to correct here. That should stay "and still recovering real estate attorney" on there, but it takes a long time. But the good news is you're all splitting my bill today, so your share will be pretty minimal. I see a few other attorneys here. I can't speak for them, but as a real estate attorney, full-time attorney for about a decade, I did a lot of leasing and a lot of sales transactions, so I got a lot of experience in that realm. And what does that entail? That entails a lot of sitting in an office all day, every day. So I'm the perfect person to make this presentation. I have a lot of experience doing it. And as I joined Goldmark Commercial, the office industry has been a major focus of mine. So I joined Goldmark Commercial in 2020, which, as we know, that's an interesting time to join the office industry. It was right after COVID hit in March of 2020. And it was interesting. A lot of people raised their eyebrows, say that's probably not a great time to get into office sales and leasing. Why? Because this is all you heard and saw. The death of the office space as we know it, right? There are tons of varying opinions on the status and direction of the office world. People are working from home. People are working remotely. Some have come back to the office slowly. Some have never left. Some it's been the status quo the whole time. A lot of people are going to the hybrid model. Home a few days a week, office a few days a week. So the conversation has been ongoing nationally and locally as well. Getting into some national office trends, according to a recent Collier's report, the national office vacancy is at about 15 to 16.5% nationwide. 70% of employees say they now work from home at least 2 or 3 days a week, so they're adopted that hybrid model. And here, conflicting opinions. So 33% of executives say they will downsize in the next year of commercial real estate, but actually 58% said they will enhance or expand. So opinions vary even here. So even though vacancy on paper is around that 15-16%, that doesn't tell the whole story, right? We see even some of this here in our market, the empty parking lot effect. There's a lease in place, that tenant is paying, but it's an empty parking lot. A lot of people are working from home. So we call it shadow vacancy. And this slide illustrates that. If you look at this graph, Castle Security Systems is a nationwide security system company, and they track key fob entries for employees for some nationwide companies. And if you look at this graph right away, it's not very notable, right? It just gradually increases, but if you look closer, that was March 4th, 2020. We were at above 95% people coming into the office every single day. Obviously, it took a dramatic dip after that. It's been slowly recovering ever since. A local example, Blue Cross Blue Shield of North Dakota, they gave us some of their statistics. They currently have a little over 900 employees. 30% are back full-time, 25% completely remote, and 45% have adopted that hybrid model. So change is coming one way or another. There's a lot of dynamics, as I mentioned, with office right now. What we are mostly seeing, nationwide and locally, as we'll find out, people want less space, but more amenities, nicer spaces. We're becoming a little more high maintenance, apparently. Some of those dynamics are the flight to quality, food, lounge areas, concierge services, comfort and lounge areas, natural light. Those have been some key aspects that we've seen. Optimizing the office space for different uses. Collaboration, a big open space. We've all seen that model. Some have still stick to the private office model, but we're seeing optimization even within one office space for multiple uses. Some of those include collaboration, learning, even rest. We've all seen the nap pods. Now in hardworking North Dakota and northern Minnesota, we don't take naps on the job, but some places they do. Another dynamic, building and rebuilding now some social capital, getting people to actually interact with people in the office. People have found that very important. So whether that is that collaborative work or just building camaraderie among team members, that's been a huge dynamic that we're seeing come back. And the fourth dynamic's been interesting. Prior to COVID, employers typically had the leverage, right? If they wanted their employees in the office, typically they were in the office. During COVID, that shifted to employees. Employees said, I want to stay home. They had more leverage. As Andy mentioned, if an impending recession is coming, potential layoffs, we could see that power dynamic shift more back to the employer. So now let's dive more into our local universe, our office universe. I'm going to use the term metro when I talk about the entire metro. One pet peeve of mine that my wife says I need to work on, the little things, they let bother me. But when you say Fargo sometimes, people say, well, is that the city of Fargo? Or is that the whole area? If you say Fargo Moorhead, you're leaving out West Fargo. If you say Fargo Moorhead West Fargo, that's a mouthful. So when I'm talking about the whole metro, I'll just say metro. So here is the current status of the office industry in our market. At Goldmark Commercial, we have an internal process where we've actually identified and classified every single office building in the metro, and it's shown on this map. So there's about 1,000 office buildings. With that equals about 12.5 million square feet of office space. 20% of that office space is Class A. The vast majority is Class B, 74% of it. And Class C is very small at 6%. And most of you know, but Class A, B, and C is essentially just a ranking system, somewhat subjective of the quality of an office space. So the vast majority standard office is B. The nicer stuff is we label as Class A. 28% of the total office space in our market was built before 1980. It's an interesting stat. And we've seen some nice steady growth, 11% growth the last 5 years of new office space. So for new construction in 2022, Fargo was up pretty significantly, about 120%, West Fargo was actually down 53%, which is interesting, and Moorhead increased, but it was fairly minimal. So now that we know what exists, let's take a look at some leasing activity that we saw in 2022 and what's available right now. First, a quick note on our leasing data. All of the leasing data, not sales, but leasing, is only office that went through the multiple listing service, or what you know as the MLS. This does not factor in any private transactions from landlord renting to himself or renting privately without going through the MLS. But based on our experience, the vast majority of leases in our market do go through the MLS. So overall, the office market is in great shape, with a vacancy running at about 7.5%. Comparing that to another similar market as Sioux Falls, they're almost double that at about 13.2%. And then again, nationally is at above 16. So at 7.5, we're sitting pretty good. Vacancy fell each quarter of 2022. Inventory's down at about 18%. Prices for all office space were largely flat in 22. We didn't see many significant increases or decreases. And this may surprise people. Class A had the strongest 2022 compared to the last 2 years. B and C remained fairly stable, but A saw big growth. So we're seeing that flight to quality, that high maintenance attitude, even here locally to some degree. So diving in city by city, here we have Fargo, West Fargo, and Moorhead. All cities saw declining office inventory last year. We'll go one by one. Fargo, they're the leaders. They have the most office space. They're the drivers of the market. So they mirror the metro as a whole. Vacancies fell quarter over quarter all in 2022. Prices were largely flat. West Fargo, sort of the new kid on the block with office space, right? Most newer product is on the city's south side. We're seeing most new office product in West Fargo. So they have higher vacancy rates, but that's just because the product is so new. And Moorhead, as a resident, we have a lot of pride, but we don't have a lot of office space. So not a lot of inventory overall. The market does appear fairly healthy. One thing I'd like to note on these slides, if you look the days on market for office space, so for instance, Fargo and West Fargo, they're at about 445 days. What that means, you list an office space to rent, that's the average days on market before it gets rented. And I like pointing that out because I think that raises eyebrows. So we obviously rent a lot of office space for our clients. Just to set expectations, that is the industry average. It's well over a year for an office space to get rented. Now let's zoom in further on each city. First with Fargo, downtown has the highest vacancy rate in the entire metro. That's at about 14.5% down there. Otherwise, the market's very healthy at about 5.5% north or south of I-94. West Fargo, again, largest new supply in 2021 and 22 came in West Fargo. So vacancies reflect that. Again, just newer product, hasn't had time to rent out yet. Typically higher price point, and they typically ask for longer lease terms on the new product. And Moorhead, again, theme is very low inventory all around. It's stable, but it's low. Downtown and north of 94, there's just not much office space. But what's there is pretty much full. The highest is south of 94. That's at about 8% vacancy. So getting into diving in further to leasing, for sizable leases in 2022, which we've classified as 10,000 square feet or more, we saw 10 deals, and that was up more than double than 2021, where there was 4. We saw 10 in 2022. Those are all shown on this map. As you can see, it's typically in the southwest quadrant of the metro. 6 of those, interestingly enough, were Class A, and 4 of those were Class B. But it's interesting to point out the pronouncement of the death of the large office. We didn't really see that in 2022 in our market. We had 10, which is a pretty sizable amount. Some noteworthy office leases we saw, some big ones. First one, Bank of the West. They relocated to Eagle Ridge Plaza off of Veterans Boulevard in Fargo. It's about 30,000 square feet. Essentia Health, they took about 15,000 square feet at the Lights on 32nd Avenue in Cheyenne in West Fargo. And Arcos Health, they're a company in Arizona that located a branch here now. They took 15,000 square feet in the Proficient Tower off of 45th and I-94. So that was all leasing activity in 2022. Now let's look at the sales side, buying and selling of office buildings. In 2022, we saw 63 total office sale deals, which was up from 2021. Again, comparison, Sioux Falls saw about 42, so we saw quite a bit more than them. However, the square footage, as you can see, was down, so we saw more deals but less square feet. That changed hands. For investors, the big one, overall price per square foot, $177 a square foot. That was up considerably from 2021. 2021 was about $118 a foot. Here we went to $177. And ironically, 2020 was the high, just slightly at $178 a square foot. So we saw an increase year over year, but not quite as high as 2020. So how did sales look per city? Fargo, sales were down by volume, but that price per square foot again was up. West Fargo, we saw the highest price in the metro, and I'll get to that in a little bit why that is. You can see it's almost double at $300 per square foot. Why was that? I'll get into a little bit more in a little bit, but 20 of those 23 office deals in West Fargo were small standalone office condos. We've probably all seen them. Some of you probably work in them. Those are newer product in our market. They're typically built 2020 or more recent than that. So that explains the higher price per square foot in West Fargo. And in Moorhead, again, lower volume of deals, but the values were still strong on a per square foot basis. So some noteworthy office sales. Here's that standalone office condo concept. The Oak Ridge development, just south of 32nd Avenue in West Fargo. That's this product. Typically, they're about 3,000 square feet, which is pretty small, or less, and they're built new. So they can range greatly in price per square foot, between $185 all the way up to $500 per square foot, depending on finishes. So that's what skews that number. Another noteworthy sale, the hospice building sold just off of I-29, $111 per square foot. This was an older building. It was built in the 1970s. That was 32,000 square feet, multi-tenant building. Just by Fleet Farm off of I-29, we saw another noteworthy sale, $5.2 million. This is about 20,000 square feet of office, higher price per square foot, newer product, and some current tenant that boosted that. And a new developments in 2022, a major one downtown, as most of you know, Bell Bank. They're doing a full interior, full exterior renovation of their new corporate headquarters on Main Avenue. It's about 105,000 square feet, 12 floors, a new rooftop patio, so all the rest and collaboration you could want there. So that was 2022, leasing and sales. How does that apply to today? Let's look forward to 2023. And again, like I mentioned, opinions on the office market vary. And like some of the stats I showed you, there's stats to show both opinions, whether we're declining or we're increasing. But based on our experience, our predictions, more people will be coming to the office, whether it'll be on that remote, few days a week at home, few days a week at the office, or full-time. At the same time, I think we are going to see more office vacancies, so we'll see that increase slightly. I think the Class A trend from last year will continue into this year. Those rental rates will increase slightly. We're likely to see at least one more Class A spec project, just capitalizing on that trend. And Class B and C prices, I think they'll hold. We'll probably see a slight vacancy. I think they will hold. Inflation will cause them probably some pressure to increase, but just lack of demand will probably fight that, and they'll hold pretty steady. And my wild card, I'm not going to get too greedy. The Minnesota Wild will win one playoff series if they make the playoffs. That's a big if. So that concludes the office market update. Let's transition now to industrial. Brett Saladin is our next presenter. Brett is a commercial agent with Goldmark Commercial Real Estate here in Fargo. He actually grew up in the Chicago area. He played football for John Gallardi at St. John's University. And a fun fact, he started losing his hair at the ripe age of 23. So everyone welcome Brett. Thank you guys.
Well, good morning, everybody. Thanks, Paul, for that introduction. You guys just had to leave that last point on there, didn't you? So we got bald jokes at 9 a.m. on a Wednesday. So anyways, well, welcome once again. My name is Brett Saladin. I'll be discussing the industrial market here in the Metro. Just a little bit about myself. About 10 years ago, when we were living in the Twin Cities, I was actually in sales and recruiting. Why is that important? But I was recruiting positions within the industrial market in the Twin Cities Metro. So filling positions, anything from your general assembler, machine operator, order picker, material handler, forklift operator, but all the way on up to your high-level machinist, engineer. Why is that important? Well, now 10 years later, it's kind of crazy to have that experience of going into all these facilities, hundreds of facilities in the Metro, understanding what these people do on a daily basis. Back then, we would call them tours. Now in our language, I think we call them showings. So it's kind of crazy how now that experience comes to fruition. Additionally, when we moved to Fargo in 2016, I actually started to work with my father-in-law, who owns a commercial construction company here in town, specifically in masonry. What that allowed me to do is really understand the build process, but really make local connections with contractors and developers here in town, and that really serves me well, I think, in this role right now. So with that being said, really the question is, what is industrial? Some of the properties that would make it up would be your production facilities, your manufacturing facilities, you have your distribution facilities, warehouse, shops, shop condos. Those are some of the properties that we'll kind of discuss here in this industrial sector update. So the industrial sector may not be as fancy or as sexy as retail or office or multifamily, but I truly believe that this market is truly the backbone of America. It truly is the engine that makes our country run. And so with that being said, we'll kind of get into it. So the headlines from a national perspective. Essentially what had happened is COVID lit the industrial market on fire. Absolutely lit it on fire. So in 2022, you can see how some of the headlines were very bullish, very strong market, very hot. But as all markets, they're cyclical. And so I think some of the skeptics started to kind of come out of the woodwork later in 2022 and started to essentially ask the question, will the industrial market start to burn out? What does that look like? And so an example of this would actually be Amazon. So what they did is they started to kind of pull back a little bit with their rapid growth. So you'll see here, once again, this is one example of one company that started to kind of pull back some of the reins with some closures, cancellations, and delays. But once again, I want to make sure the point here is overall, and I'll have statistics here in a moment to back this up, overall, very strong industrial market throughout the country, and then, of course, here locally. These are the statistics that really back this up. As you can see, 3.4 to 4% industrial vacancy across the country, just an incredibly low number. 713 million square feet of industrial space was under construction nationwide at the end of 22. Also, that's not to mention the 450 million square feet that was actually delivered in the year 2022. And then lastly, Aaron Hill will actually discuss this a little bit later in retail, but it's interesting to note, for every $1 billion in commercial sales growth, or e-commerce sales growth, 1.25 square feet of new industrial space is required. And the reason why that's important is just the correlation between the e-commerce and the industrial space needed. Once again, coming back down to a local level, as in regards to how the industrial space was still on fire here, we do have a local case study. So this property is in North Fargo, just over 19,000 square feet, built in '74, just shy of an 1.5 acre lot. It sold for $1 million at the end of 2018. Another point, it was on market for 708 days. You fast forward 3.5, almost 4 years later, there was a little bit of a facelift on the outside. They did rebuild the office interior in 2020, although in 2021, there was a water main break, completely destroyed that rebuilt office. We're talking drywall was completely gone, electrical exposed. Here's the kicker. Sold as is for $1.95 million in June of 2022. And by the way, it was under contract within 7 days. So just a local case study to show how our market here in the industrial sector continued to remain hot. This is our industrial universe, a total of 2,300 industrial buildings. When we dive in, it equates to 37.64 million square feet of industrial space here in our metro. Now, one thing to note, you'll note on here we have storage units, 2.26 million square feet. We wanted to make sure that we included storage units as a bullet point, but the storage units they are not included in the overall data that we're presenting. But it is a sub-market that is very strong right now, and just something that we wanted to point out. Now, out of the 37.5 million square feet, about a third of that was built before 1980. And then lastly, in my opinion, this is the largest takeaway, almost 16% growth in the industrial sector since 2018. To put that into perspective, it's actually the largest 5-year growth out of all of the updates that will be presented today. So very, very significant and very positive. Looking at the industrial permits, Andy had alluded to this earlier in regards to that there's a drop. He put the ownership on me to explain why. Thanks, Andy. But essentially, three main things. First off, a lot of the large industrial permits many of the large industrial permits were actually pulled in 2020 and 2021, and therefore some of that construction actually carried into 2022. So therefore a little bit of a decrease in permits pulled. Also, limited supply of lots to build on. So many of the platted industrial lots were actually consumed in 2020, 2021, which therefore there wasn't a lot out there on the market to build on. So once again, a little bit of a pullback. And then lastly, not least, construction costs that Andy covered earlier. Very important in regards to some of the reasons why some of those potentially slow permit uses. So getting into some of the leasing. As you can see, 2.9% here locally, just incredibly low. Trending lower than the national rate. In this market, not as good as Sioux Falls, but 2.9%, just an incredible low number. Last year, there was 271,000 square feet of industrial space leased. Breaking this down city by city. So once again, this is as of the end of 2022. Fargo, 4.1% vacancy. West Fargo, 0.2%. Moorhead, 0.8%. Currently, in Fargo, as of right now, 67% of available inventory still under construction. In West Fargo, as of today, to Paul's point earlier, according to the MLS, 0. current listings in West Fargo for industrial space. And in Moorhead, 1. So very, very tight. What I always like to understand is how do we compare nationally? Where do we rank as far as base rents? So national average rent, $7 a square foot. You can see LA leading the charge at $12 on the West Coast, the East Coast. You have Boston, New Jersey, pushing 9 or over 9. But then it's also really, really nice to note here in the Midwest, how do we fare? Well, $7.44 a square foot. We're outpacing Sioux Falls, Twin Cities, Chicago. Look at Kansas City and Columbus. Just incredibly low price per square foot in rent compared to what we're getting here in our metro. So, something to note. Also, these numbers do not include CAM. This is just the base rents. In 2022, the industrial space, roughly, the CAM was about 94 cents a square foot. But once again, this is strictly just base rent. Into the industrial leases for our market. So this is a high bay distribution building. This is just off of 19th Avenue North. There was a 72,000 square foot lease that was put in place in 2022. Additionally, on 12th Avenue North, there was a 50,000 square foot lease put into place in this property as well. So switching gears a little bit, going from leasing into the sales. As you can see, over the 5-year period, once again, 2021, like Andy said, absolute banner year. You can see 2.2 million square feet. However, there's one outlier, Amazon. So Amazon sold in 2021 for $202 million. That equates to $187 price per square foot. So what we wanted to do is we wanted to kind of pull that outlier out of the equation. And so, just like it says, the sales, total sales volume rose 32% when essentially you kind of take that outlier out of the equation. Now, at the same token, when you pull Amazon out of the equation, that's a 1 million square foot facility. So therefore, in 2021, if we take that away, we're very, very close and right on par from 21 into 22. City by city, Fargo led the way, 76 deals. West Fargo 15, Moorhead 13, for a total of 104. Now that 104 transactions is the highest number of industrial transactions that we've seen in the 5-year period. Additional side note, what I like to see, $80 million in total industrial sales. Just an incredible year and something that is very noteworthy. Looking at some of the industrial sales. So 44 of the 104 industrial sales were those shop condos that a lot of us see. That's 40%. 40% of the industrial sales came on a smaller scale in these shop condos. Now, it's hard for us to tell whether it's personal use or for business, but at the end of the day, 40% of our sales came from the shop condo concept. And another noteworthy sale. So you have, this is just south of 7th Avenue North here in town, 5 to 10,000 square foot facilities, anywhere from $105 to $125 a price per square foot. So very significant. Looking into coming attractions, developments for 2023. So Axel Spur. This is currently under construction. Just to the north off of 12th Avenue, we have 100,000 square feet coming to our market sometime this summer. Additionally, Dakota Commerce. So this is located just to the north of County Road 20. There's the first 2 buildings fully leased. The third building in process right now with about 200,000 square feet coming this fall. So looking forward, our predictions. Where are we going to go? One or more conversions of office or retail to industrial use. This might be off the cuff a little bit, so bear with me. But to see a high demand, such a low inventory, it'll be interesting to see, in my opinion, if the property owner is going to get creative and potentially switch a use, like I said, from either office or retail to industrial. We'll see if that happens. Asking rents, price per square foot, I think there's some wiggle room. Once again, high demand, low inventory. I think there's an opportunity for the rents to go up. Additionally, new spec projects up. This goes back to, once again, high demand, low inventory. With such a low vacancy rate for our metro, I think there's an opportunity as long as those developers can get a price per square foot that works for their pro forma, works for that opportunity. I think spec projects could still be on the rise. And then lastly, for our industrial market that's unique, it's been talked about already, but the FM diversion. We're going to have hundreds of contractors coming to our metro over the next couple of years. This is definitely going to add pressure to our market. So we're excited to see where that goes. My wild card, being a huge Green Bay Packer fan, I hate to admit this, but I truly do not believe that I'm going to see number 12 in the green and gold. So we'll see how these conversations go with the New York Jets. So with that being said, sincerely appreciate everyone coming out this morning. I actually have the pleasure in introducing our next speaker, who is Mr. Aaron Hill. Aaron's a commercial agent here at Goldmark Commercial. Did you know Aaron co-founded Fargo Brewing Company here in town? He's a current Fargo Park Board member. And last but not least, he's a fellow Johnny like myself from St. John's University. Please welcome Aaron Hill.
Thank you, Brett. Go Johnnies. And for the record, I think industrial's sexy, you know? I mean, granted, I know how to operate a forklift and drive a box truck, but you know, that's kind of the interesting thing about owning and operating a brewery, right? A lot of people don't necessarily understand it's two kind of very different businesses, right? So we have manufacturing and distribution, and then we have the retail portion of the business. And on the retail portion of the business, it's consumer driven, right? And in the beverage industry, it feels like the consumers are changing almost daily what they're looking for. And you kind of have to stay on top of those trends, right? And as consumer trends change, we talk about individuals, we change, right? You know, before I would stand up on a stage like this with a hoodie and say, "Hi, my name's Aaron, I like to party." And now I say, "I'm just looking for comfortable shoes and a nap on the weekends." Don't worry, Paul, I'm not gonna nap at the office, no nap pods, right? But on the weekends. And so I think like no other sector, the retail sector is the one that has to shift and adjust to those consumer demands, right? And so we'll kind of take a look at the national trends in the local market, and we'll shuffle gingerly into the retail outlook. So national trends, of course, the rise and fall of the American shopping mall. Now, we seem to be sort of bucking that trend locally from what I hear and see. West Acres seems to be doing well. Keep in mind as we go through these numbers, they do not include West Acres in our numbers. Of course, as we've kind of talked about throughout the theme, right, through industrial and the whole nation, basically, online shopping and e-commerce is exploding, and we'll look into that. Andy kind of mentioned a little bit, workforce shortage, right? That really hits this industry hard, and especially what I see in the restaurant and bar industry, the back of house, the kitchen staff, it's really hard to find employees. And I'm sure most of you are aware it's not that hard to drive around town and kind of notice. You see gas stations paying $18 to $20 an hour, offering signing bonuses and things like that. So that's a really, really big issue, and it hits this sector extremely hard. Looking at some kind of national numbers, the national vacancy is actually relatively healthy. Depending on which source you're looking at, we're looking at 4.5% to 5.5%. That actually surprised us. We thought it would be a little bit higher than that. Another really interesting stat we found is for the first time since 2016, store openings outpaced store closings. So leading the way in the openings nationally is the discount retailers, and we've seen that locally as well. Dollar General, Family Dollar, Dollar Tree. Experiential tenants are also growing right now nationally. Theaters, fitness centers, entertainment venues, and this shop-in-shop concept, and we'll look at an example of that kind of later on. On the closing side, it was clothing. Clothing, footwear, and accessories kind of led the way on store closings. And as we've talked about, kind of the theme, e-commerce, right, hit $1 trillion. So how did we get there, right? Look at that. I think this is just amazing to me. Is obviously we were seeing that online shopping trend growing prior to COVID, but to see that jump between 2020 and 2021 was massive, right? So COVID just poured gasoline all over the e-commerce fire. And we hit over $1 trillion last year, and it looks like a trend that is not slowing down. So kind of now looking more at our local metro, there's over 1,100 general retail and restaurant spaces in our local market. So when you're looking at the map here, the blue dots are the ones that represent the general retail, and the gold are the bar and restaurant. And I don't like to make a lot of guarantees or certainties, but I feel really confident that I have been in every single one of those gold dots on this map, and probably a few times. Shouldn't really surprise anybody that retail is location driven. High visibility, high traffic corridors make the most sense for retail locations. So kind of some high level local stats here. And this is total inventory we're talking about here. Over 14 million square feet of total inventory in our market. Kind of similar to some of the other sectors we've looked at. Over 30% of that inventory was built before 1980, so we do have kind of an aging inventory out there. And looking at our growth in inventory over the last 5 years, relatively stable, relatively steady at 5%. That's a positive sign. So looking at the permits, big year in 2022, up over 81%. Fargo led the way with right around 45 million. Really interesting thing that we thought maybe wasn't even correct, but it is, there were no new permits in West Fargo in 2022. And my guess, potentially with the high permitting, could be because of the age of the inventory, right? As people updating these spaces. So looking at some of our leasing numbers, market-wide here, we're sitting just under 6%. So retail did have a tougher year than some of the other markets, but again is staying pretty healthy. A little over 160,000 square feet leased last year. Of course, is the trend we've seen. Inventory peaked in the months following COVID, rebounded in 21, and then did start increasing again in 2022. We did see a positive absorption, but relatively low at 38,000 square feet. Breaking it out by city, so Fargo's performing moderately well. Inventory is up, but so are prices. Downtown has the highest vacancy rates in retail. Looking at West Fargo, again, kind of like Paul talked about, low vacancy, low inventory, and the highest price per square foot, and that's because of the age of that inventory. It's newer, it's nicer, typically. Moorhead, oh man, I just feel kind of bad like we're beating up on Moorhead here, but highest vacancy, lowest price per square foot. Downtown is sitting right at 22%. Yeah, we're looking at a different vacancy. One of the things to kind of note is if you notice at the year-end vacancy was 12.8%, and it's currently sitting at 6.7%. That's because of the Moorhead Center Mall. So at the end of last year, the Moorhead Center Mall was included in our listing service. Currently, it is not in there. That's why that number is different. Taking a look at a couple of notable leases. So we had Crunch Fitness in the former Toys R Us building, over 35,000 square feet. So again, fits this national trend of fitness centers, right, growing. Also the Guitar Center in the former Best Buy building. So again, another experiential type business, just over 11,000 square feet. So breaking it out by, or now we're moving on to sales, excuse me. So this is sales of retail inventory. So we can kind of see again the trend stands, right? 2021, big year, almost 6,000 square feet sold in 2021. A dip in 2022, but that is the highest price per square foot we've seen of this 5-year trend. Breaking that out by city, we can see Fargo led the way with just shy of 21 million, West Fargo right behind at 20 million. There was one large deal that kind of drove a lot of that volume. We'll look at that here soon. Moorhead again, 10 deals, lowest dollar amount, lowest price per square foot. Interesting note here too of what was sold last year. Nothing was newer than built in 1984. So most of them were built between 1955 and 1973. So kind of going back to Fargo, you'll notice that the Fargo price per square foot is so much higher than the others at $319. Well, that was skewed by 3 large deals. What were those large deals? car washes. So the Silver Star on 45th Street was actually bought and sold twice. The Tidal Wave, just a couple of blocks north of here, was purchased, the Tidal Wave on 13th Avenue. And look at the price per square foot, all the way up to $1,400 per square foot. And so when you look at these, like the car washes is kind of a funny thing, right? It's kind of like we joke about it, we look at the maps. But then you go, okay, there must be something going on, right? Like what are they actually doing? Why is this happening? So what they're doing is they're building these spaces, they're signing long leases with themselves, and then they're selling them to out-of-state investors. So it's actually not a phenomenon just locally. This is a national trend that's happening. So what we're kind of curious to see is how will this pan out? Will they be able to maintain those lease payments as the years go on? So we'll keep an eye on that. So looking at a couple of noteworthy sales. So this is the sale that I was referring to for West Fargo. As you can see, over 90,000 square feet sold, $12.5 million. The Westgate Commons sold to an out-of-state investor. Moving downtown, we've got 6 Broadway in Fargo, and this is going to be the new Pounds restaurant. They're moving to this location, so they did start construction a few weeks ago. There is some office space included in this as well, but about 17,000 square feet, just under $3 million. A couple of the developments in the community. We've got Brewhalla at Drecker. I get to talk about somebody else's brewery for a change, right? So remember I was talking about the shop-in-shop concept? This is a really good example of something like that. So you've got 2 event centers, we've got multiple restaurants, multiple craft vendors, and over 100,000 square feet. Big project, exciting project, and I actually think it'll be good for my business as well to draw more people into our neighborhood. The last development we'll look at is the Midtown Market. So this is the old Kmart on South University. So over 30,000 square feet there, plus 4 pad sites, looking at about a $27 per square foot price there. All right, so the predictions for the retail sector. I really think we're still going to see that labor issue, right? You know, I'm not sure exactly how that's going to be corrected. I know everybody's talking about it. We're working on it. But I think that's going to continue to plague this sector. I think the vacancy will go up. I think the rates will go up as well. And I think we're going to see a negative absorption in 2023. So now my wild card. I know we talked a lot about e-commerce. Looks like it's positive and growing. But I think the internet's a fad. I think it's going to go away. And I'm super excited for next year to stand up here and show all of you that the internet doesn't exist anymore. All right, well, that's my time. I appreciate it. Now I get the honor to introduce the multifamily update. And doing that for us today will be Mr. Patrick Vesey. Patrick is a senior commercial agent here at Goldmark. He has been with Goldmark for over 20 years because he started when he was 9 years old. Please welcome to the stage Mr. Patrick Vesey.
Well, thank you, Aaron. I can honestly say out of all the agents in this office, I'm the only agent that was licensed in the 1900s. A little bit about, I was going to go somewhere else with that, but I'm going to just hold tight with that. A little bit about me. I started in 1999. I got a license, obviously, and started in the industrial and office sectors were primarily what I started with. Moved into the retail, kind of just got familiar with the market. In about 2004, I was having a meeting with a friend and a mentor of mine, Jim Wheeland, and he had said to me that you should probably get involved with owning a piece of property so you can understand both sides of the transaction. And 2004, I purchased an apartment property, my first apartment property, and I learned that I severely overpaid for it. So what do? You change toilets, you change water heaters, you change some pumps, whatever it takes. You do the snow removal. So I got to learn both sides of that investment, both hands-on and financially. So that qualifies me to talk about multifamily. So let's get started. If I can press the right button here. Oh, there's a laser. Okay, what we have here is our multifamily universe. Again, our office compiled every multifamily property in our metro area, which consists of 2,300 multifamily buildings, both Fargo, Moorhead, and West Fargo. Breaking that down, we have a total of 55,659 multifamily units that consists of fourplex or larger. Interesting stat, 21% of the market consists of apartments built prior to 1980, Moorhead having the most at over 45% that were built prior to 1980. Why is that important? I think Andy put 1980 in there because that was the year I was born. On average, the multifamily growth consists of 7.6%. You can see Fargo leads that at 9.3%, West Fargo at 4.3%, Moorhead at 6.8%. Now that we know the overall multifamily universe, let's take a look at the permit numbers. The Metro 2022 units are up 14% year over year, with 2022 had 1,304 permits, outpacing 2021 with 1,139 permits. Why is that? That's because interest rates remain low and demand continued to keep up with supply. It's interesting to follow with the increased cost of construction, the market can sustain the increased rents as the Metro continues to grow with such low vacancy that we see year over year. Here you can see, thanks to the most recent data provided by Appraisal Services, let's look at the most recent vacancy rates city by city. This is as of December of 2022, but Fargo was at 4.7%. West Fargo was at 3.9%, and Moorhead at 6.5%. We're keeping up. The market seems to absorb all of the new apartments being built on an annual basis. Let's take a look at the sales numbers. Here you can see some historical multifamily sales. Multifamily sales in 2022 were down year over year. 2022 had 1,101 units sold, and 2021 had 2,137 units sold. It's tough to compare with the record volume of 2021, but it was still a strong year with total units sold, but also a record year for the price per unit. As you can see, we came in at about $89,000 per unit. Overall, there were 3 large deals in Fargo that helped bring these numbers higher. There was a 97, a 91, and an 84 unit apartments that sold. Those ranges in prices were $123,000 to $196,000 per unit, which brought the price up to, or the average up to $89,000. Again, values per unit, they highly depend on the quality of the assets sold in any given year, amenities, location, all those things matter. Here's a deeper dive into the city stats in multifamily sales. Multifamily sales in 2022 consisted of 61 total sales with a total of 1,101 units. Fargo led the pack with 44. West Fargo had 3 sales and Moorhead had 14. The total sales equated to $98 million, as you can see. Let's look at some noteworthy sales that happened in 2022. This one set the benchmark for the highest price per unit. This is the Woodrow Wilson property. Sold for $19 million. It was a 4.8 cap. There were some outside investors that bought this property, located at 3rd Avenue and University Drive North. Another one was Trollwood Village. This is located up on North Broadway, 3105 North Broadway. This has 185 apartment units, 30,000 square feet of commercial, sold for $15 million. This was a 7.25 cap on the pro forma. Looking forward, here's some noteworthy multifamily developments in 2023. The downtown mixed-use development, which is just west of the old Broadway. It includes 500 parking stall ramp, 420-seat theater, and 145 apartment units. This is the block mixed-use redevelopment. This is located on 17th Avenue South and University Drive, where Dwayne's Pizza is located. This will have 15,000 square feet of retail. 127 multifamily units will be included on that project. Another one across the river, this is the former Days Inn site in Moorhead. This is the Compass Apartments. The first phase is 93 units. That total project will include 204 total units. Looking forward, my predictions are vacancy rates will stay down. The permits for new construction will be down just because 2022 was such a banner year. I think we're going to be more in line with 2021. The rental rates will continue to rise. And multifamily sales volume will increase. Now for my wild card. I think with 15 new car washes added to the Metro in the last 18 months, we'll have the cheapest car wash rates in the 3-state area. That concludes the multifamily. Next is the investment update. I'd like to introduce Mr. Andrew Hansen. Mr. Andrew Hansen is a commercial agent at Goldmark Commercial. He spent 15 years in the commercial banking and lending. He is a Scorpio, and Andrew cannot do the splits. Welcome, Andrew.
Okay, thank you, Patrick. Appreciate the introduction, and it's true, I've never been able to do the splits. First off, I want to thank you all for attending this inaugural Commercial Connect event. I come from the banking world, and when I left, and some say it was a midlife crisis, the majority of my loan portfolio was in commercial real estate. I worked on everything from 8-figure multifamily investment deals to smaller owner-occupied commercial real estate where we utilized program lending like SBA, Bank of North Dakota, and North Dakota Development Fund to creatively find solutions for those customers. I loved real estate then, but I absolutely love real estate now. I'll be covering the investment world. I'll start with the national overview and then dovetail that into our local market and cover some good local data. As you can see, here are some of the trends that are happening nationally, but most certainly are affecting the FM market. There are two here that I feel that are important to cover, and I'll take a deeper dive. But one thing to note, evictions on the rise. I was just on the phone about 2 weeks ago with a local attorney here, a well-known local attorney, whose firm does a fair number of evictions in Fargo, Moorhead market. And he told me that they are busier than ever and have never seen this many evictions in their careers. So food for thought. But first, I've got to address the headwinds that investors are facing. Here are some of the major ones. Andy did a great job of covering the Fed's monetary policy, inflationary pressures, and their effects on new construction in the investment world. I'm going to specifically address cap rate pressure and the impact that they have. This is a very powerful slide to show that. There's a lot to digest here, and I borrowed it from Moody's Analytics from an article they had back in October. It shows the theoretical rent growth needed to keep the value of a property flat in a rising cap rate environment. A couple things to note on this graph. It models an initial 5-cap property and assumes a fixed expense ratio. So NOI growth equals rent growth. The multicolored lines you see represent different hold periods. Top to bottom, it's 3, 5, 7, and 9 years. Off to the left, this is the percentage of annual rent growth needed to maintain that value. Let me say this again. This is the percentage of annual rent growth needed to maintain that value. At the bottom, this is the exit cap rate and steps up by 50 basis points, or 50 basis point increments. This is the upward cap rate pressure. So let's run through a quick scenario using this graph. Say an investor has a 5-cap property, and they've been planning on exiting said property within 36 months. As they forecast out, they say, worst case scenario, we exit at a 6.5 cap. Using this chart, they realize that they need to have 9% annual rent growth just to maintain the value of that property when it was previously a 5-cap. Now imagine what a 2-year or a 1-year exit looks like on this graph. They would be much steeper lines and require much higher annual rent growth. So what's an investor to do? Well, there's a couple options. Option 1, sell. Take a hit. Live to see a new day. and call us. Option number 2, don't exit. Sit on it and wait. Hope that the Fed's soft landing actually happens, or there's a mild recession that makes the Fed reverse their monetary policies, which will ultimately bring down interest rates and cap rates with it. Holding, though, will present its own challenges, both for the investor and more specifically the bank. Rising cap rates will produce lower valuations and bring into question loan-to-values. But a more pressing problem is debt service coverage ratios. Since interest rates have nearly doubled, I can see in certain circumstances, and I've done some calculations on this, in higher leverage loans, that there will be a need for either a capital injection, creative loan restructures, or a combination of both just to right-size these loans. I know of 2 investors in town that have had to do this, and they've wrote some pretty big checks to make those loans fit DSCRs. Then there's option 3, NOI growth. This is my favorite. Whether it be tightening up expenses, rental increases like the previous slide showed, RUBS implementation, or finding additional fee income, in a rising cap rate environment, anything you can do to grow your NOI will greatly benefit your investment property. I'm going to take a quick dive into the last 2 I just mentioned. RUBS implementation. This concept isn't new. It's been around for a while, but investors are taking a second or third hard look at this. RUBS can be an excellent way for a landlord to reduce expenses without directly increasing rent prices, which in turn increases the NOI and profitability of the property. Finding fee income. Investors are or will be searching for additional fee income on their properties, whether it be adding $25 to $50 a month in garage fee to an older multifamily property where historically they included garages in that rent, to new, larger multifamily construction projects that are designed to charge fees for work-from-home office spaces, on-site storage units, and fees for additional parking stalls in their parking garages. Any way you slice it, NOI growth is paramount in a rising cap rate environment. Now, I don't want to give the impression that commercial real estate is necessarily a bad investment, because there still will be opportunities to find strong deals. And if you compare commercial real estate to other asset classes, the picture is brighter. Bitcoin in 2022, Bitcoin way down. Equities down. Gold slightly up. Treasuries slightly up, but have climbed even higher in 2023. Commodities way up, and this is a direct result of inflation. So why invest in CRE? Well, you still get yield off the property. You still get asset appreciation over the long term. You get great tax advantages. It's been historically an inflation hedge, but maybe right now is not the time to talk about that. And then diversification of assets. Moving on to some local data. Our friends at Appraisal Services have provided us with some current cap rate ranges. As you can see, office and retail are nearly identical, with Class A starting at a 6.75 cap and stretching to 7.75 or higher. Industrial, which is currently the hottest product on the market, is a 6 cap for new, fully leased, stabilized property. But it's interesting to note here, a new vacant industrial is at a 6.5 cap. Perhaps that's a testament to the strength of that market. Multifamily, brand new, stabilized, 6 caps, stretching all the way to 7.25s or higher for older, more weathered properties. Some noteworthy investments. Here's a 30,000 footer that traded hands in 2022 for 6.4 cap rate. We call this the NASCAR building, because if you've ever seen the other side of this building, you'll understand why. The second noteworthy sale is a 25,000 footer traded for 5.5 cap in 2022, or $117 a foot. Now for a few predictions for 2023. With signs that inflation remains stubbornly high and the Fed signaling that they'll raise rates further and keep them elevated for an extended period, unfortunately, interest rates are going to go up. Cap rates will follow. Sales volume will decline, but buying opportunities will increase. Cash will be king, and those that have it will be positioned to take full advantage of those opportunities. In keeping with the theme for the wild cards, the sports theme, I should say, I predict Rory will win the Masters and complete his career Grand Slam. That's it for our investment update, and I'm going to turn it back over to Andy, where he's going to give us an ag land update and close out this presentation. Thank you, guys.
All right, I'm the one that stands between you and the rest of your day, so I'm going to try to make this quick. But ag land is a huge component of our local economy. And from my perspective, I grew up on a farm in northeast South Dakota. That farm still operates today. My brother has taken that operation on. My parents are still involved. Love to get down and help when I can, just very little. But my family started that farm in the mid-'80s, about 1985. And in order to support their farming habit, they had to start another company, and they got into real estate and auction business. And that was their main way in a huge interest rate environment in the mid-'80s to kind of make everything work. And so from a young age, in high school and through college, I got a chance to work in our farming and our real estate and auction company. And so it's fun to now have come out of the technology world and come back into something that is touching on my roots. And it's really fun to be able to give you an update here on farmland, specifically Cass County farmland. I'll just make that quick note. I didn't want to take the time to go into the full Red River Valley or the southern Red River Valley of farmland, so we're going to focus on Cass County. We do have a lot of data for Richland, Wilkin, Clay counties as well. Today we're going to really just dive deep on Cass County. One final thing, I have incorrectly predicted every World Series since 1989. I probably should front that, because next year when we come back, I think my prediction will be wrong again. All right, the headlines. Farmland, national headlines are going to mirror a lot of what we see locally, and that is record high farmland prices. It's been driven by a lot of things, but this is record-setting prices across the country. If you look at state by state, almost every state is up to almost record levels. Iowa hit $30,000 an acre. We're not quite there in Cass County. We got a little ways to go to 30, but we have seen some increases. And so let's talk about some of the national numbers and then get local. What's driving some of this? If you look at farm incomes, they are up significantly. We've had some good crop years. We've had some good yields. We've had good, strong commodity prices. All of those things have put more money into the farm economy. According to the USDA, farm income's up about 16% year over year. Okay, another trend that we're seeing nationally, and this has been happening for a long time, farms are getting larger because there's fewer and fewer farms. So USDA said there's about 70,000 less farms today than there were in 2014. You've got fewer farms competing for more acres. And if you look at their data, according to the USDA, they believe the average price per acre in the United States topped $5,050 last year. That is also a high, up 14% year over year. So what do our numbers look like locally? We've tracked every single farmland sale in the county. And here's what those numbers look like. Year over year, 20%. We're up to an average across the entire Cass County of $6,279 per tillable acre. And then some of the other things that impact pricing in Cass County that I would say are unique to Cass County, two things I'll point out. Number one, about 19% of the acres in our county, tillable acres, are owned by out-of-state owners. Now, that could be one of two things. They inherited the land. They used to live here. They moved on. Grandma and grandpa died. They own that land. But we also have out-of-state investors who also own some land here in Cass County. And I would say, well, we don't have the hard data, so I can't give you the hard number. I would bet a lot of money that Cass County does tend to have a higher percentage of investor owners and out-of-state owners than our neighboring counties. We're an urban city. We have a lot of people who maybe grew up here, have moved out. They want to own a piece of back home. And so we have a little higher pressure in the farmland market in Cass than what you might find in non-urban counties, okay? And then the last point I want to make is around the Fargo Moorhead diversion. We've mentioned it a couple times, and that certainly has had positive impacts, and our team has covered some of the positives. But I can't overlook that there are negative impacts from a farmer's perspective and our farming community's perspective. Okay, and I want to go a little bit deeper on that, and specifically I'll just mention from a pricing perspective, the Fargo Moorhead diversion adds some pressure to our market as well. Okay, so let's dive a little bit deeper on the diversion topic real quick. year to date, not year to date, project to date, from when this started to where we stand now, they've acquired about 14,500 acres. And these dots on the map represent where those transactions were. I want to focus on the last 3 years. And so here's where the acquisitions have been focused since 2020, about 6,300 acres, roughly $70 million, plus or minus. That would be both for land acquisition and easements required for the project. Every one of those blue dots is someone who has lost farmland. They maybe were the operator of it, or maybe they owned it and were renting that. And I don't know about you, but if you grew up on a farm and you lost a quarter of land, that's a big deal. And you oftentimes want to try to replace those acres so that you don't go backwards in terms of where your farm stands. And so there's been a huge impact for local farmers in the lost ground to their operations. And how this impacts the sales prices and the sales activity, if you're getting money for land from the diversion, you play by the rules of the 1033. Most in here probably know the 1031 rules and how that works from a commercial real estate perspective. A 1033 in the case of a government acquisition, you get up to 3 years to replace the property, not 180 days, but 3 years. You have no identification period at all, and you get to actually take receipt of the money, so you don't need a qualified intermediary, okay? And so we know if you received money from the diversion in the last 2 to 3 years, you likely have some money in your pocket that is looking for more farmland. That's adding some artificial pressure to an ag land market that wouldn't be there in other cases. And so I think that's important for people to understand. Now, let's talk about our universe, okay? We got some help from the folks over the NRCS and USDA here. Total acreage across the entire county, about 1.13 million. Tillable acres, acres you can grow a crop on, we figure our estimate about 983,000. So let's look at the data. This is a 5-year run in the vertical bar chart showing where prices were per acre along with the total acres sold. And over this 5-year window, you'll see this was a huge year in pretty much every measure. Total acres sold, 13,000. Total price per tillable acre, 62.79. Just an incredible, huge year in ag land sales. Now, our data actually stretches back to about 2011, and so I'll point out the outlier from that longer data set. 2012, there was 19,000 acres sold in 2012. That was a year where we also had strong commodity prices, we had huge yields, and we had some tax law changes coming that forced a lot of people to decide now is a good time to sell land. And so there's about 110 transactions back then compared to 72 last year. But if you take 2012 out of the equation from volume, 2022 beats it, and it absolutely crushes it in terms of the total price per acre. So $62.79, $84 million in total sales. 2012 was about 80 million total. So they sold 6,000 more acres in 2012, but $4 million less in total volume. That's the difference in prices that we've seen from that period to this period. Now, I want to dive deeper into 2022, but before I can do that, I think it's important to do a quick lesson on soil. Some of you who have been on the farm, or maybe you do some ag lending yourselves, you understand this concept, but not everybody might. And so let's talk quickly about Cass County specifically. In this picture, this is a map that happens to sit in my office. It's one of my favorite maps. This is a result of a project in 1924 where people went out to every piece of land, not just in Cass County, but around, and they soil cored every section, every time they saw a contour change, and they created this beautiful patchwork quilt of soil types across our county. And they labeled every single one of them, they named them, and created this beautiful map. And so what you see, I'll try to give you a little bit of what you're looking at. On the left or western side of the county, you have what we call drift prairie dirt. Drift prairie dirt, it's sandier, it's lighter soils, it is not the heavy clays that most of you, if you've built a home in the Fargo Moorhead area, are more familiar with, okay? So that's the drift prairie dirt. Then you get the shoreline of Lake Agassiz is the nice bright oranges and blues that run vertical north to south. And then east of that shoreline, you find Red River Valley. This is the clays, this is the heavier dirt, with the exception of the gold colors where you see a little bit in the middle and somewhat towards the south side near Leonard and Kindred. That's the Bearden loams, the loamier soil. This is the perfect mix of the heavy to the light. It's ground that will produce in the wet years. It's ground that will produce in the dry years, where traditionally drift prairie might not perform well in a dry year because it's sandier, and where Red River Valley soils might not produce as well in a wet year because of the soils being heavier in clay, okay? So that's the real quick breakdown of the two types, general types, I'll say. There's a whole lot of subtypes of soils, but the general types. And then one more concept to explain. You're going to see CPI on the next couple of slides. That is not Consumer Price Index. I'm done talking about inflation, okay? CPI stands for Crop Productivity Index, and it's, I'll say, a relative measure of the quality of farmland. It is not the only measure. And you can absolutely see one year where a lower CPI piece of ground can outperform a higher CPI piece of ground. But all things being equal, it is one measure to look at the relative quality or productivity of a land. The lower the number, the worse. The higher the number, the better. And our ranges in Cass County tend to be from about 65 to low 90s. That's kind of the general range of CPI. So here's what we've done. We've taken all the sales in Cass County and we divided it by Drift Prairie, the west side of the county, and Red River Valley, the east, roughly 2/3. And so that's what we're going to look at next, and we'll start with the western side of the county. So Drift Prairie dirt, a positive year. This is not a negative year by any means, but the numbers don't jump out as much. Okay, we're in the lower CPI type of soils. We were up about 4.5% year over year. The volume significantly higher year over year. We were about 37 transactions in 22 compared to 15 in 21. And if we look at that average CPI, it slipped a little bit last year. So it went from 74 on average to 72.6, pretty marginal, not a huge difference. And you can see the trend line, 22 beats all the previous 5 years in terms of the total acres sold as well as the price per tillable. Let's look at the eastern side of Cass County next. The numbers are quite different, much stronger on the eastern side. When we're in the Red River Valley soils, higher CPIs, closer to Fargo as well, right? We're getting now around the metro as opposed to the western side. So average price per tillable up almost 32%. That's a significant increase. Volume, about the same number of transactions east versus west. Not quite as big of an increase. There was 20 in 21 and there was 35 this year. And then quality actually went up a little bit as far as the CPI is concerned. I should be careful. It's not just quality, but the average CPI did go up marginally as well. So we have more data to share if anyone's interested on ag land. I wanted to be fairly brief in my comments there. So just a few last predictions in terms of our ag land market for you. I think the total acres sold will go down. That was a really high 13,000 acre sales year. I think we'll see that drip down somewhat this year. Not significantly, but I don't think we'll top it. I think we might be hitting the peak. And I know that's wishy-washy. You don't go higher, you don't go lower. I'm going to go right in the middle. I think we've maybe hit about the peak for farmland prices, so I don't expect another 31% jump on the eastern side of Cass County. I think we'll start to see that level off. I think the average CPI will likely drop some. Generally, if you're in a position where you're looking to sell, or in certain cases, you're having to sell, it's not very common right now. You're going to sell your poorer ground, your lower productive ground, and so I think that'll probably bring that down a little bit. And then finally, my last wild card, which really isn't so much of a prediction as it is my goal and my hope, and that is next year we have a bigger room so that you guys don't have to stand in the back, and we see all of you and some friends and some coworkers back because we've had a phenomenal time putting this event together for you. We hope that you have found it valuable enough to come back and tell your friends and neighbors about it as well. So with that, I'd like to close our event and just say thank you for coming. We sincerely appreciate you've taken 2 hours out of your time. We know that all of you are busy. We did have a fireworks slide, and we changed it this morning because this is probably more appropriate for our market right now than big booming fireworks. So thanks for coming through the snow to join us here today. And sincerely, a big thank you for coming. Just 2 final comments here. There is an agenda on everybody's table. On the back of that is a QR code to take a post-event survey. This is the first time we've done this, right? And so we want feedback. How can we make this better? How can we ensure that you come back and more people come back? Please do fill that out. And if anyone's got questions, our team is going to stick around after the event. We have the room until noon. We probably won't stay that long unless you want to, but we are going to be here for a while, so please do come up, stop, talk to us if you have any questions or want to go deeper on anything. Thank you all for attending, and we hope that you have a great day.